Alright, good afternoon, everyone. Today is Wednesday, the 18th day of September, 2024. FOMC day. Anybody know what they did? A half point, quarter point? Should be a quarter point. Um, anyway, I have to start it all off the way I always do, by showing you how to get things done on the website. This isn't actually the right website to go to. That's a new website. If you go to targetviewtrades.com. Now, I have to show you all this because you have to have TradingView charts to you have to have TradingView charts to use our stuff. But first, I'm going to welcome you all and tell you, if you have not taken a free trial with us, you can go here to tvtrades.com, tvtrades.com, click right here on this thing. It says start free 3-day trial now. It's going to bring you down to here. Just fill it out. 3 different packages. One's $25 a week, one's $90 a week a month, and one's $9.97 a year. This is 10% cheaper than that. This is 23% cheaper than that. So it's up to you. Whatever you want to do, go ahead and do it. It is, Jeff, there is a box where you can type things in. It's a question box where you can type things in. Okay, that's where people are typing things in. There's a question box in there for you to type stuff in. Okay. It was a half a point, really? It was a half a point. That's surprising. Okay, well that's good. Hey, Wayne. I have said that I typically use bracket orders 36 by 48. Yes, 36 by 48 on the NQ31 range. I use a 36 by 48 mark. Okay. Let me go through this stuff first. Okay, I'll jump into all the questions here in just a sec. If you haven't taken a free trial, if you just go to tvtrades.com, it's a much cleaner thing. If all you want to do is just get in there and take the trial, go to tvtrades.com and sign up for the trial right here. Alright, it's right there. You can click on this thing, it'll bring you right down there. Pretty slick, huh? If you go to targetviewtrades.com, there's a lot more information. Now, if you do not have TradingView, you gotta go to targetviewtrades.com, click on getting charts right here. Targetviewtrades.com also, when you sign up for the free trial, you're going to be sent an email that sends you to this page because it's got a lot more information on it. This is a functional page, whereas that is just kind of a flashy little informational page. This page has a lot more function to it, where if you don't have TradingView charts, you come here to targetviewtrades.com, click on getting charts right here, and that's going to bring you to this page. Click on this, TradingView charts. Choose one of these charting packages, click to the monthly because you don't want to pay for the annual right away. You want to do that when they have a sale, which they should be having pretty soon. They probably just had recently, but they should be having another one pretty soon, I imagine. But the Essential is going to give you a couple of markets at once. You see how when I hover over that, it gives 2 charts at once right there. When I hover over this one, well, it shows the same image, but you can have up to 4 charts at once with this. You can have up to 2 charts at once with this, and 8 charts at once with this. In the beginning, you probably only need to use the Essential, and it's $14 a month, but it's a free trial for a month when you sign up for it. If you trade futures, you're gonna need to get real-time data. Okay, to get the real-time data, what I need to do when I get real-time data is I go here and hover over this. This ID right here is what you need to give to me to enable the indicators for you. Hover over the right. That says logged in as TV Trades. Send me whatever you're logged in as. Okay, but to get real-time data, you go here to accounts and billing. Let me see. Okay, I can do that. Go here to account and billing. We'll go to account and billing. I got to do this at the beginning of every webinar, so I just cover it, get it out of the way. The thing that you need to sign up for is this one right here at $7 a month. Alright, if you're trading futures, you need this. If you're not trading futures, you don't need to bother with this stuff. But if you're trading futures, you need to get this. Okay? $7 a month. That is really cheap real-time data. Alright, so let's go back where we were in here. Alright. You found the question box. Good, Jeff. Good. I see that. You're in there. I thought you knew what that was. Alright, so I have an agenda, a little bit of an agenda, but I do have some questions that people had emailed in that they want me to cover. One of the things, Wayne, I see you're in here, and one of the things you want to cover, and that plays into my agenda when I'm done with everything else. I want to cover a couple other things. One of the questions was with the 31 range NQ today, the 31 range NQ, this is 100 range NQ by the way, with the 31 range NQ, just taking the signals, and I imagine you were taking them from the sniper, the signals, oops, see that thing right there? You asked me about something, do we have another way to filter things? We do, if you want to. Remember the whole idea behind this was to get rid of the indicators, not add indicators. I added this oscillator down here because that is really helpful to see things coming. Alright, so you guys can see things coming. And oops, yeah, my mouse just came right off of the pad there. There it is. Alright. I had this thing that happened to me a little while ago. You know, something goes down the wrong hole and you start choking and coughing. It started to do that and I caught it. When I caught it and I forced it back up, it went right at my nose. It was awful. I don't know why I just told you that, but but it was an awful experience. Anyway, back to this. John G. I don't know if you're in here right now, but I'm guessing that you are, and you would ask me this question. It says you are, okay. So you would ask me this question earlier in an email. You know, do you have something you can put on charts to help filter out the trades when the 31 range NQ stops out? Now, first of all, if you get into a trade, like let's say you had this trade right here that would have stopped you out. Okay, this one right here that would have stopped you out. It did not put in a lower swing. It did not continue the trend. You do not take this trade after it. Right? This one would have given you some profit, but I still wouldn't have taken that trade until you had a lower swing or a change of direction. Okay, same thing over here where you got this trade right here, and it gave you a little bit of profit, but it never exceeded the prior swing high. So I would not trade again until that prior swing high is exceeded. Okay? Every trade that you take, every single trade that you take should exceed the prior swing high or low. This trade here had to get down below this level. It did. This trade here had to get below this level. It did. This trade here had to get below that level. It did. This trade here had to get below that level. It did. This trade here had to get below that level. It did. This trade here had to get below that level. It didn't. Right? This is where it ended right here. It didn't continue the trend. So you stop trading in that direction. Okay. Now that, Wayne, that also goes to what you're saying. You know, when I said you ought to be able to just look at the chart like this and say, and sort of be able to trade it. You know, given the given the range trigger that I've given to you guys now, I've allowed you guys to view. Once you get into the overbought, the next down close is usually going to be your trade, right? Once you get into the overbought, the next down close is usually going to be your trigger. All right, get into the overbought, the next down close is usually going to be your trigger. Every time you get one of these down closes that comes out of the overbought, every time you get a down close that comes out of the overbought, it has to continue the trend before you trade in that direction again. Okay? It has to continue the trend before you trade in that direction again. That, Wayne, is how you can, when you're looking at this right here, if you're just using this, and you're looking at the market right here, you can tell when it reaches the end right here. You can tell when the trend is getting tired. It doesn't exceed the prior swing low, but not only doesn't exceed the prior swing low, but this leg down is shorter than this leg down. When the legs down start to shrink, let me draw on the chart for a second. Alright, sorry, I had to take a drink. My throat was starting to get dry, but let me draw on the chart for a second. I figured out how to draw on the chart now too, guys. I come over here and use this thing. When you know, every leg down pulls back, and it should exceed the prior swing low. So it's going to get down below that level if you want to take another trade. But the leg down, the leg length down, right over here, right? This was our leg length down, right there. And this was our leg length down, right there. This was a little bit of a pullback. And this was our leg length down before it pulled back. So the leg length got smaller right there, right? Then right here it got a little bit bigger than that leg length, but it was still smaller than that leg length. So the leg length broke up right there. The leg length broke up right there. That's indicating right here where it doesn't continue the trend is telling you that you're probably at the end of the trend. Okay, so you don't want to trade any more in that direction. Once you get this one, because this is still a valid trade right here, well, this one right here. Still a valid trade right there because it came out of the overbought while you're in a trend. But after you've gotten all these opportunities right here, and every one of those was a good one, you don't really need to trade 100 times a day. You know what I mean? You don't really need to trade 100 times a day. If you get in there, like, let's go to this. today. I hardly traded at all today. But the last couple of days, I haven't had great results. I've been having great results this month, but but I only had 8 trades this morning, and that's unusual for me. I mean, yesterday I had 29 in that 2-hour session. Today I had 8. You don't need to trade 100 times a day. Get in there, get your goal. Like today, it took me 1 trade and 1 minute, 1 minute and 1 trade to get to $1,800 this morning. You don't need to trade 100 times a day. Get in there, make a goal for yourself that you can achieve every day, and achieve that goal and stop trading. All right. The longer you're in the market, the longer you're at risk. So you don't want to do that. You want to get in there. You want to get in there, make your money, and get out of there. And I know there are people who might want to sit there and trade all day long, but very few people are actually successful long term doing that. Very few people, and they're usually burned out, after no time at all. Aren't there better things to do in life? I think there are. But this thing down here, if I were to trade and quit trading and add 1 contract a month this year, so far this year, quitting trading when I get $100 per contract and adding 1 contract a month, I'd be at 9 contracts right now. And so far this year, I would have had to work 53 hours, and I would be averaging $2,300 an hour. If I started in January with 1 contract and just did that, with a simple, achievable goal, some goal that I can achieve every single day, and I have achieved it every single day, 175 days so far this year. If you just do that, that's pretty good money. $2,300 an hour is pretty good money. When I kept doing it for 20 months, I ended up at $7,223 an hour. But that was just to make a point and satisfy the plan. A lot of those trades do go to break even, John, but it depends how you manage it. This is a 31 range bar. So if you're trailing, you get 30. Let's say you get 20 ticks in profit, 25 ticks in profit. I usually lock in when I'm trading on the NQ. I lock in a point, in points. Like I'll lock in 4, I'll lock in 8, I'll lock in 16, I'll lock in 20. So I start locking it in, and that's what you should be doing too. Don't go to break even and just leave it at break even every time. You go to break even after 15 ticks. Yeah, that's pretty much what I do. After 16 ticks is when I go to break even. Hang on, I got a cough. But 15, 16 ticks, I go to break even, and then maybe lock in a little bit. If it goes beyond that, I lock in a little bit, like lock in a point, lock in 2 points. And usually, today it wasn't so much, John. Today it wasn't so much, but usually it's going to keep going. And I have my 48 tick target on there, and most of the time I'm going to hit that 48 tick target. And if you look at this, yesterday I was up 216 ticks on the NQ. The day before I was up 270 ticks on the NQ. If I focus on the NQ, then there's usually some really good trades. Even today there was really good trades. I mean, I want to show you one thing. When you said that to me, I assumed you were using the sniper, and you were doing the snipe trades, right? And that's great. The snipe trades are really good usually. Every now and then, I mean, today's FOMC day, so it's not going to be perfect. The markets are going to react a little bit weirder today than they normally do, and I'll get into that stuff in a minute. That's the whole mind trading thing. But I gotta get used to this. I was trying to move the chart over. Okay. But I know this morning, in the morning when you had sent that email to me and you said, there's using the sniper, and I'm guessing you were using the sniper. There are a bunch of trades that didn't work out so well, and I'll show you guys something, though it didn't seem to help out all that much today. But there are going to be days like today, and if you get stopped out a few times in a row, you shouldn't get stopped out in the same direction in the same market twice in a row ever. All right. You should not do that. You should not have 2 trade opportunities right in a row that will stop out, one right after the other. Okay, if that does happen to you, you've probably done something wrong, or you missed a trade. But if you find yourself where you're getting stopped out, the market's just not producing, from one side to the next, where, like in here, let's say, I'm trying to find an area, like this one right here, went enough to get the stop to break even. This one enough to get the stop to break even. But let's say you didn't get your stop to break even. You stopped out on that. The whole idea behind making sure it puts in a higher swing is making sure that you have a trend. And if you do put in a higher swing every time, then you're going to have some sort of profit on it every time. That was a weird sound in my headset. Hang on, I gotta cough again. Okay. Every time you take a trade, it should exceed the prior swing high. Every time. Okay, it should exceed the prior swing high. Why? Because you're taking a trade with the trend, and it should continue the trend. If it just hits the prior swing high, or it doesn't exceed the prior swing high, then you got the last trade in that trend. Alright, you got the last trade in that trend, like this one right here. This is the last trade in that trend. Right? It didn't exceed the prior swing high. So you got this trade right here, and you might have gotten your stop to break even, you might not have. You might have stopped out on that. But look at all the trades before it. You know, if you got in there and you took, you know, half of those trades, and you had a reasonable, achievable goal, then you should have achieved your goal by taking half of those trades. You know, this one would have stopped out. That's really the only stop out. This one, right here. And this is just, you know, just a random viewing, but this was after the FOMC came out, so this was probably moving pretty quick. It doesn't look like it moved that fast though. Well, I guess there's quite a few 31 range bars right there in less than a minute. But leading up to it, it was crawling. Leading up to it, the trades that I was doing between 1 and 130 today, I had one trade between 1 and 130. Look at all these 31 range bars. If I hit Alt and over, then I'll be able to get off of that. Here, like in here, it was just crawling through here. And on the YM, I took a trade in here. This one, I recorded the whole thing. I guess it was this afternoon. I recorded the whole thing. That'll be available at some point. The bias on all the time. You got to turn the bias on. Right now, the bias is not on. But if you turn the bias on, it's going to eliminate most of those scenarios where you would have a stop out in one direction followed by a stop out right in the opposite direction. Most of the time. And John G, that also is something you might want to consider if you're having issues where you're getting trades that are going back and forth and none of it's falling through. Put the bias on. I don't know if you had your bias on, but put the bias on. Okay, the default bias is set to 233, and you all know. Well, I'm guessing you all know. I guess I should go probably look and see who's in here. Let's see. Is anybody in here for the very first time? Has anybody not seen any of this stuff in the past? Because I really should go through and start from the beginning if that's the case. I'm sorry if I totally just breeze right over that whole thing. Sorry. I think people are in here for the first time. If you have questions, type them into the question box. Okay, the only people who can see your questions, alright, well, the only person is me. Okay, you've watched the videos. Yeah, Gary, I know you have. Yeah, John, you would probably want to have the bias on the NQ because the directions change quickly. Okay, the bias is there. Let me just explain to you what the bias does. Okay, if you go in here and you turn on the bias, it's set to 233, but let's set it to something else. Let's set it to 55. All right, just another fib number. We'll set it to 55. Now it did change a little bit. It gave you this trade right here. Okay, so what's the difference between a 233 and a 55, you might ask, right? Let's put it back to 233. I'm going to move this over. You see, these are the trades that we have on the chart right here. We have that one, that one, that one, and that one. And this is just a random sampling. I didn't know that anything was going to happen. But we'll set it back to 233. And you see that one went away. What's the difference? Well, let's just show you what the difference is. Okay. What that represents is this right here. This guy. Now, one of them was a 55, right? And we'll put another one on. And John, I got to show you something else too in a few minutes, okay? Be a surprise for some of you. I'll make this a red one. Okay. So the 233 is the red one, and the 55 is the not red one. When it's set to 233, it's saying only give long trades. The 233 is the red one. It's saying only give long trades when they trigger above the red line. Only give short trades when they trigger below the red line. When you set it to 55, which is the blue one, it's saying only give long trades when it's above the blue line here, when it's above the 55, and only give short trades when it's below the 55. So as you go back in here, you'll see where it is set right now to the 233, right? It's set to the 233. But you can see there are going to be places in here where I think when we change it to the 55, you're going to see that there are going to be more trades in here. Like probably one right in here. Probably, we definitely know one right there. Probably another one right in here. But you see what the difference is? You don't need to see that stuff on the chart. You know, if you know what it is, you know how it's going to react. You know, it's going to print that right there, and probably a couple more of these right in here. Okay, that one right there was one. I think right in here that was one. I believe that was one. That was one, I think. Okay, that's what the difference is. You're going to get more trades. If the lower it is, the higher it is, you know, the more it's going to filter out. So 233, sorry, that's the wrong one. 233 is what I was, is what I have as a default, because it's, you know, it's kind of middle of the road. It filters out things pretty well. But you can change that if you want to have more trades or less trades. You can make it a bigger number. If you're not getting a lot of follow through, you can make that a bigger number. Okay. Hang on. The oscillator, yeah. I'll get to that in just a sec. Hang on. Okay. How do you roll forward on trading into the new ES contract? I made a video about that. I should have put that in the thing that's gonna get sent out. Go out to YouTube. Well, I'll show you, but I mean, just go out to YouTube. There's a video on YouTube too. But just click on this right here. Neil, click on that. Delete all the stuff with the NQ. Now, the way that this works, if you choose NQ1, it is always going to keep you on the leading contract. Alright, so it's going to keep you on the leading contract. But just choose the current contract, the one with the most volume. That's the Z right now. The U does not expire until a week from Friday. Alright, the Z contract is what I'm trading on right now, so you just choose the Z. Okay, that's all you have to do for that. I did make a video about it. It's out on YouTube. Okay, John. Alright, you can watch it on replay. Okay, yeah, John, wait, one more thing before you run. Let me just show you this really quick. Inside the sniper, right here, it says snipe filter 77. Make that 777. And magically, you're going to get something else that you can use. There. Okay, if these lines are all spread out, then you're in a trend and it's probably okay to trade. If they're not spread out, you're not in a trend, and it's probably not okay to trade. Okay. Now, I know I don't want to put indicators on the chart for you guys, but John specifically asked for that, so that's what you have to do. Okay. That will give you something you can use toward that. All right. I am not using the aggressive entries on the 31NQ. You don't need to use the aggressive entries on the 31NQ. You can. So you can use the aggressive entries. One of the other questions was these yellow arrows. These yellow arrows, they're within the sniper. Okay? They're not within the regular TV trades. I can put them in the regular TV trades too. Or are they? I don't remember. No, they're within the sniper. They're not within a regular one. I can put them within a regular one as well. I probably should. But the regular one already has its own thing that lets you know that a trade's coming up. And it's not as closely related to the yellow arrows as the sniper is. The sniper is really closely related to the yellow arrows, but the regular TV trades is not. Okay. You don't think you have the sniper filter in your sniper indicator? Wayne, you need to refresh your charts, and you just have an older version. Okay, but it's right here. The snipe filter is what it's called. Snipe filter. And that one's been out there for a little while, I think. I feel like it has. Just refresh your charts, and you'll have it. Okay. Because if I go here, and I click on this, and sniper, like that, and it's going to be over here, and inside here it's a snipe filter right there. It's on 17 by default. Okay. Now again, I don't want you guys having a whole bunch of things in there. I don't want you having a whole bunch of indicators in there. That's just gonna throw you off. But this down here, the oscillator down here, that's pretty cut and dried. It's either gonna be above or not above, or below or not below. It's gonna cross or it's not gonna cross. Right? That's a simple yes/no question right there. It's not, well, it's kind of almost there. It's it's leaning down a little bit. It's starting to turn. That's not the case. It's either above or below. So the oscillator, I think, is okay to add. Adding stuff on the price is really, I don't want to do that. That's where things are really going to screw you up. But back to all the questions. Excuse me, I'm sorry about that. All right. Does the oscillator work with the TV Trades original? Yeah, hang on, I have to call. Alright. I'm back. Does the oscillator work with the TV Trades original? Yes, let's just put it on. And let's not even put the TV Trades on a range chart. Let's put the TV Trades on like a 5-minute chart. Okay? So here we are on a 5-minute chart. Same thing. Every time you come out of the oversold, you should have a trade. It should move in that direction. Every time it comes out of the oversold, it should move in that direction. Well, I'm saying out of the oversold when you get a blue background. Out of the oversold when you get a blue background. Out of the oversold you get a blue background. Out of the oversold you get a blue background. Out of the oversold blue background. Out of the oversold blue background. Every one of those worked out. Every single one. All the way over here too. And this is on a 5-minute chart on the NQ. Now I know we got some guys in here, some newer guys who are trading stock. So let's just do NVIDIA. NVDA. Right? Do that on a 5-minute chart. The same stuff. Got a blue background every time it comes out of the oversold. Every time it comes out of the oversold with a blue background, right? If it comes out of the oversold and it doesn't happen to make it above, all the way to the other end, that means you didn't put in a higher swing. All right, it means you didn't put in a higher swing, did not continue the trend. So do not take the one after that. Right? Every single trade you take, no matter what time frame it is, every single trade you take should continue the trend. Right? You don't want to buy something when it's in a downtrend, do you? It just doesn't make sense, right? Wayne, yeah, when it comes out of the oversold with an up close, yeah, it comes out of the oversold with an up close on the blue. This is on a 5-minute chart. When it's coming out of the oversold on a range chart, if this goes up and the bar actually closes down, don't take that. Okay, that happens occasionally, like maybe once or twice a day with all the thousands of bars that there are. Maybe once or twice a day. The direction of the close and the direction of this will not be the same. The direction of this will not be the same. Do not take that trade. Okay? But sometimes on a time-based chart like this, on a 5-minute chart like this, sometimes it will have a close that's below the open, like this one right here. Well, this is actually an up close above the open, but this one right here was just barely above the open. Sometimes it will not be, if we didn't have the paint bars on there, sometimes it would be a red bar. That's a little different when you're working with the time-based bars. Now, the other thing about the time-based bars is the stop, right? This is going to give you your stop based upon the last arrow. All right. The real question was, does this work with these arrows? It does work with these arrows, but the real entry is going to be without using the arrows, without tying it to the arrows. And that brings me back to another thing that goes to what John was asking earlier. Now, when you tie it to these arrows right here, it's not necessarily going to line up the way that it does with the sniper. The sniper is built off of this, but can you use this on time-based charts? Absolutely. It's not these arrows here on the time-based charts. This one, the regular TV Trades arrows on this chart, the mid-trend trade and that one, total different calculation that makes those happen. All right, it's a total different calculation. You can see a lot of times it's going to be pretty close. The mid-trend trades are going to be pretty close. There's a couple of them there, 2 of them, 3 of them right there in a row. If you want to use the oscillator on a time-based chart, that's all you have to do. If it's got a blue background, it comes out of the oversold. You want to start looking to go long. If it's got a red background, it comes out of the overbought. Start looking to go short, right? So let me go back in here for a second. James K. That is something, when you're trading options, for all you guys who are trading options, if any of you guys are trading options, I know some of you are, but if you're intraday trading and you're looking at options, that is something that is going to be just great. The next lesson, the next Wednesday's thing is about options, equities and options, and there's a couple of things. Maybe this week I'll try to put something into the TV trades that has the yellow arrows, but let me put the sniper on here for you for a minute. And in the sniper, I'm just going to get rid of the actual sniping arrows, okay? Okay, I'm going to get rid of the purple arrows that come with the sniper. And I can get rid of the background too because we already have that. Right. So all they get in here are the yellow arrows with this. Alright, to turn the yellow arrows on, and this was something Gary, you asked about, it's right here, the sniper alert notice. You go to inputs, you gotta have that on, I think, right? Do you? No, I guess you don't. You don't even have to have that on. Okay. So just have this, alright? In here, turn the sniper alert notice on. And what that's going to tell you is when what it should be telling you. I guess it's not doing it on this. Why is it not doing it? Why is it not doing it on this? It should be giving you an indication. Oh, it's because it's time-based. That's why. It's because it's time-based. It's not range bar-based. It's because this is working off of the sniper, and the sniper works off of range bars only. That's why. So to get one of these arrows, you got to close either at the very top or the very bottom of the bar. That's why it's not showing them all. Okay, well I can fix that, and I can make an adjustment so that this triggers those arrows within the TV trades, because that might be really helpful to those of you guys who are trading options, to be able to have this thing trigger and to set you an alert that you can set off of this, because in here you can go in here to the sniper right now, and under here it would be the sniper nicks up close, nicks down close. That's the yellow arrow right there. Okay, that's the yellow arrow. So I think what I'll do is I will add this to the TV trades so that you can use it on the time-based bars as well, because this can be used, and that was a good question. Which one of you guys asked that? Yeah, I'm just going back down. Mark, you asked that, right? That was a good question, because you can definitely use it on anything. Alright, you can use it on a daily chart if you want to. And, oops, sorry, I didn't mean to do that. You can use it on a daily chart if you want to. What time is it? 3:34, crap. But when it comes out of the oversold, it's likely to start moving up. When it comes out of the overbought, and you're in the red, it's likely to start moving down. Okay? It comes out of the oversold in the blue, it's likely to start moving up. It works for everything. So, how do you add the TV trades range trigger? Okay, yeah, Jeff. So let me go back to the beginning here for anybody who's in here for the very first time, because I do think let me go back and see who's in here right now. I thought there was a brand new face in here. So let me just go back to the very beginning and go over some of the basic stuff with the indicators, okay? We'll start out with the TV trades. I'm going to get rid of this for right now. We'll start out with just the basic TV trades. As a matter of fact, I'm going to shut everything off. Okay, I'll shut everything off. And we'll just start out. This is what your chart looks like with nothing on it. Right, you come in here and just put the TV trades on like this. Now I'm going to go quickly through this because I don't want to do it on a daily chart, but we can do it on a daily chart. I just want to go quickly through this because I have a lot of stuff that I want to go over, and I had my whole agenda and I haven't even touched that yet. And it is 3:35. I said last week, maybe we should make this a 2-hour meeting, but I actually have to go to Raleigh tonight, so I can't make this last too long. Anyway, when you put the thing on by default, and you put it on by default, all it's got set is the long trades right here, right? Because I created this for equities. When I originally created this thing, I created it for equities. It works great for everything, but I created it for equities. So what it's going to do is give you a blue arrow when you have a long opportunity, right? And the way that it works, as far as the advanced notice goes, if you have a blue bar on a red background, it's going to tell you, it's going to give you an alert that says, the next up bar, not the next up bar, but a long will be coming soon. And if you have a red bar on a blue background, like this one right here, it's going to tell you a short will be coming soon, right? Like right in here, it'll tell you a short will be coming soon. Now, I don't have the shorts turned on by default because most people only buy in equities. They're not usually selling, they're not usually selling short on equities. But if you're playing with options and you want to buy puts on equities, then you're going to want to have those shorts turned on. It's just a simple checkbox right here. Just check that. It's going to put the shorts on. Okay. Now, what I was saying earlier about the bias, so you don't get things like this about the bias, you go in here and turn that bias on, and it's going to eliminate all those things that are flipping back and forth like that. All right? It doesn't only do it for futures, it does it for everything. You put the bias on. Okay. Can I show that on the QQQ? Yeah, sure. QQQ. It's the same stuff on the QQQ. Okay, and if I shut the bias off, it's probably going to have a couple of flips back and forth in here, like that one and that one. But when you turn the bias on, it's only things above the 233 by default with the bias on. Only trades above the 233 are going to show, and only trades below the 233 are going to show. So we don't have anything below the 233 for a little while here. But if we did, it would show them. Oh, I don't have the shorts on. I think I shut the shorts off. Yeah, there we go. Now it'll show them. Alright, there you go. Alright, so that's how that works, and that's the default. Alright, the shorts you got to turn on, but then, once I first created it, there were people who might get into a trade like over here. I know this is on the daily, but you might get into a trade over here, and then, it's not going to trigger another trade until it changes direction and changes back. You're not going to get another long trade for a long time. So I created the mid-trend trade. It's going to grab something like in the middle here. All right, the mid-trend trade is this one right here, the MTT mid-trend trade. And that pops up. Now when you get a little black arrow like that, that's your warning that the next bar is likely to be a trade. All right, you don't get that on everyone, but you can set the mid-trend trade alert up. To create the alert for that, you come in here, you choose the TV trades right there. Oops, TV trades right there. Oops, I don't know how that happened. But choose the TV trades right there, and then inside here, this is a mid-trend trade buy alert and a mid-trend trade buy advance notice. So if you check that, the way that I set up the alerts, I make it do once per bar close. Put in here what the time frame is, like 1D, and this is the QQQ. So daily QQQ, MTT buy soon. That's mid-trend trade buy soon. Now, if I choose a notification right here, if you have the app on your phone, it's going to send you a message on the phone, on your app, on the phone. And if you do this, it's going to pop up a little window over here. You can have it send an email to yourself if you want with a daily. I mean, you can do them all if you want with a daily. Play a sound, it's going to play one sound in your headset. You can do this plain text, there's no sense in that. You can have a webhook URL which is sent to another app if you want. Not really much sense in that either. Put the app on your phone and it'll notify you on your phone. That's the one that makes the most sense to me. And I will show you what that looks like right here. This is what it looks like when it triggers on the phone. Alright, ES7 range sniper long, or aggressive snipe long, or sniper long next up close. That's what it'll look like on your phone. Alright, when you set it up on your phone properly. So 40 minute, 60 minute. Yeah, you can do it on whatever time frame you want. 40 minute, 60 minute. You can create your own time frame chart in here. There's a 45 minute, a 30 minute, but up here at the top you do add custom interval. So if you want to do a 40 minute, you just do that, 40 minutes, and hit add, and then you got a 40 minute somewhere in there. Here it is right here, 40 minute. So you can create whatever you want and do it however you want. You see how this is back and forth right there and right there and right there? You want to turn the bias on to get rid of that. Okay, see how I got rid of all that? Now, the table, the information in the table is going to be based upon the last arrow that triggers. Alright, so if you got the mid-trend trades on, it's going to be based upon the last mid-trend trade arrow. Okay, and the table gives you this information. It gives you the long, the stop, the dollar value of the stop if you're dealing with a stock or an ETF. It's going to give you the dollar value of the stop. The first 3 targets I put in by default. You can do 1 to 5 targets. If there happens to be no targets up above you, it's not going to give you a table. It's going to give you a little black dot if there's no targets up above you, okay? That's the way that it works. If it doesn't have anything to show, it's not going to show anything. It's not going to show a blank table. It'll show no table at all. It'll just be a little tiny black dot. Alright. I know I'm covering a lot of stuff here. Now that was the TV trades. Alright. You can show the target lines on the chart if you want to. Turn that on, and there's the target lines displayed on the chart. You can do that if you want to. One thing about the target lines, when it switches for 5 bars, it's going to leave on the old target lines. Okay, so for 5 bars, so for this, because this is a 40-minute, for 200 minutes, it's going to leave on the old target lines when it switches from one to the next. And that they could be both in the long direction. You could have like this over here. We had this mid-trend trade, and then you had this mid-trend trade, and they would have pretty much the same targets, those two, but you'd have 10 lines showing the targets on there if you wanted to. Down here you can draw the pivot labels. This is where the targets come from, these pivot labels. If you choose that, okay, it goes back and picks out all those pivot labels. Pivot look back, if the targets are too far apart, you can reduce the pivot look back, and that will change it. This look back number down here, occasionally it's going to run out of data, and all your stuff is going to go away. When that happens, you can turn it off and turn it back on. Usually that'll work, but you can just reduce this number as well, and that will bring your charts, your indicators back up. All the stuff in here, this is all display stuff. The hot tips. The hot tips show trades that should continue on in whatever direction they're going in for a little bit longer. You should have a longer run on those trades usually. That's what the hot tips are for. Okay. And that's pretty much everything in here. You can move the table around, like I have it right here, top center. You can move it, top right, top left, mid center, mid right, left, bottom center, right, left. You can move that around. You can change the text size in it. You can change the text color in it. All that stuff. That's pretty much everything about the TV trades. Okay. Now, what is the major difference between the standard TV trades and the range sniper trades? The range sniper trades are, well, the standard TV trades happen closer to the beginning of the trend. They usually happen right near the beginning of the trend. But the sniper trades happen over and over again on small pullbacks within a trend. Okay, the small pullbacks within a trend. Yeah, I have your whole list of stuff right here, Gary, that I want to go over. Okay, but if usually I would suggest doing the sniper or doing the range, but probably not doing them both at the same time. If you're gonna do them both at the same time, then probably shut the mid-trend trade off, because the arrow colors kind of overlap in there. Okay, so if you shut the mid-trend trade off in there, then you're okay. And if you leave the bias level on for both of them, probably put the same bias level on for both of them, so it makes more sense when the trades trigger. But I would say this right here is what I meant to turn on with it. Okay. Now, when you have the sniper on, we shut all the arrows off. But if you put that on, I need the aggressive sniping. I want to do the sniper by itself, but I just want to turn it on here for a second so you can see. Now, this is not a range chart, so you can't do the sniper on minute charts. It's not going to show you anything on minute charts. But let's go to a range chart. Now, this is a $400 thing. So with range charts, when you're dealing with dollars and cents on a range chart, every tick is 1 cent. It's 1 penny. So on a 100 range chart, every bar is $1. Okay, every bar is $1. And this goes back to Jeff G, who was talking earlier about the NQ and the sniper, and he was having some stop outs with the NQ and the sniper. If you go to the TV trades on the NQ31 range, just regular TV trades, there weren't that many trades today, but they were all really good trades. because on days like today where there wasn't a lot of follow through, you want to get in at the beginning of the trend and then probably not do anything else within the trend. The sniper was trying to do stuff within the trend, and there was very little trend to work with today. That's why I was having a tough time today. But if you just did the TV trades, I'm just going to do this really quick for him. Alright, if you just did the TV trades on the NQZ31 range, NQZ31 range, and you just did the regular TV trades and not the sniper. See, the trades that it was triggering today were pretty good trades. And that's all after the FOMC came out. He was saying before the FOMC, and if you go to before the FOMC, let me do this. Alt and over. That's all after the FOMC. And you see everything was doing pretty well there. But if we go to before the FOMC, which is when you sent the email today. Okay. Before the FOMC, and put the bias on so you don't get that stuff right in there. Bias is on. Okay, so there was the 233 just weaved between these right here. But most of these trades you can see are pretty good. Starting out with just the regular TV trades on there, the longs and the shorts. Okay, when there's not a lot of follow through, just do that if you want to. Don't use the sniper. Alright, these yellow arrows, I'm going to work that into the regular TV trades, because that is good stuff for you guys to be able to use, I think, if you want to use the regular TV trades on like the larger time frames, these minute time frames and stuff like that, intraday time frames. Because this triggers at the top and bottom of the bar. These yellow arrows trigger at the top and bottom of the bar. If you come out of the oversold and the prior bar closed at the bottom, it's going to trigger. And if you come out of the overbought and the prior bar closed at the top, it's going to trigger. But it doesn't tell you if you come out of the oversold and the prior bar closed above the open or below the open. And that's kind of what you need to have for this kind of thing. So I will write that in. Let me write that down, and I'll write that in. And then I still haven't got to any of the stuff that I wanted to get to yet. Well, I got to a little bit of it, I guess. Let me just write this down so I can add that this week. Okay, got it. Alright, still not clear on how to get the oscillator. Mark, the oscillator is right here. You go to indicators, you go to invite only, and it's a TV trades range trigger. Just click on that. You have it. You might have to refresh your charts or something, but you should have it in there. TV trades range trigger. Okay. It's just one thing. You don't need to change a thing on it. Just put it on, and that's all you have to do. Alright, so let me see. I wanted to address your questions, Gary. Where do you need to focus your efforts as a newbie in the system? Well, I'm giving you a lot of different things to consider right now. If you're looking to trade the NQ, the S, and the YM, and the crude and the gold, what range bar would I suggest to use for each? Well, it depends what you want to do on each. It depends what your daily goal is, what you're trying to do, how often you want to trade. What I use in the morning, let me save this and I'll show you what I use in the morning. Oh, I don't have it here. Well, anyways, what I use in the morning, for the NQ, I use a 31 range. For the Russell and the YM, I use a 19 range. For the ES, I use a 7 range. For crude and for gold, I would probably use you could get away with a 9 range on either one of those. And the reason I would use a 9 range is because they're 10 base. So you would put your buy stop order or your sell stop order 10 ticks away from the top or the bottom of the bar on a 9 range. Okay, I'll show you what I mean in a second. But do you use only the sniper or not the sniper and TV trades? Wait, why do I like the 7 range on the S more in the morning and not a larger range bar? The ES is not usually volatile enough to give me a lot of trades, Schwab. So with the 7 range, I didn't have to change anything with the 7 range. I've been using that for a long time. And when I switched that, I switched it with the other ones, like a 19 range, and it just wasn't giving me any trades. If you wanted to, and this is something that I looked at that I could do while I'm doing 100 other things. I could put a trade on the ES. It trades about 3 or 4 times a day, but you could do it on a what I have it on, a 27 range ES, and it gives some really good indications, but not very many. That's the reason why. Why do I use only the sniper or not the sniper and the TV trades at the same time? Because they overlap sometimes, and the colors between the mid-trend trade, which is in the regular TV trades, and the colors in the sniper for the arrows are the same in some cases. So it's just, you don't really need that many trades, Wayne. As I said, get in there, make your money, and get out. This tool, this set of tools can produce easily 100 trades a day, and you don't need to do that. I don't recommend that anybody do that, but it could easily do that. Alright. So, Wayne, I want to answer your question as much as I can. The yellow arrows, I addressed that. The markets that you're doing, the crude and the gold, I would do that on probably a 9 range bar. And let me show you. Let me bring up something here. I don't have a DOM up for either one of those yet, but let me just go to energies, and we're in the Z contract on crude, right? Z. Yeah, we're in the Z contract on crude. Okay, so if I bring up a crude DOM, oops, hang on, I have maximum number of DOMs up right now. Let me go delete something. Silver, I can delete that one. Okay, if I bring up a crude DOM, here is a crude DOM. Now, if I had a crude chart up, let's put a crude chart up. Let's just do CL and Z 2024. There you have it. I would do this on a 9 range. I don't have a 9 range. Okay, let me go make a 9 range. Add custom interval 9 range. Add. Okay, so I would do this on a 9 range. Why a 9 range? Well, because if I were looking to go short on a down close, right? I were looking to go short on a down close. I know where the top of the bar is. This one's at 68.31. So I would sell 68.21. It's 10 ticks away from the top of the bar. And so I know the bar is going to close 9 ticks away from the top. Right? So that is what I would use there, Gary. Okay? That's right, Wayne. Do I trade only using the sniper? More during the day. More during the day, Wayne. But the other stuff, I trade using the oscillator a lot. Okay. But you can see in here, if this is crude oil, and this is just a random crude. I'm not going anywhere and trying to really, I forgot what the word is, but pick out only winning trades. But you can see in here, every time it came out of the oversold, well, we don't have everything on here. If we had the background on, let's put the background on. Buy, sell area. There you go. Every time it came out of the oversold with the red background, you had a decent trade right there. Not so much on the overbought side right here. Remember, when it comes out of the overbought and it doesn't put in a higher swing, nothing after that matters. Okay? This was okay right here. Remember to get the goal for the day. Get the goal for the day and be done. How many times could you have done that right here? Now, if your goal for the day is the same as mine, something easy to achieve, $100 a contract, how many times could you have done that right here? If you started at the open, I don't even, hang on, I don't have the snipper turned on. Here it is. Started at the open. Here we go. Right there. Goal for the day on that first trade. Goal for the day on the second trade. This one stopped out. That was enough to get the stop. Goal for the day. And that would have kept you in the trade if you had just stopped right down here, which you would have. Would have kept you in the trade. Goal for the day, goal for the day. That probably would have stopped you. That would have stopped you. You wouldn't have done that one. Goal for the day, goal for the day, goal for the day. What range would I trade the QQQ in? Right, that's a fair question. But you understand why I chose the 9 range, right? Because this is 10 based. So if you know what the top of the bar is, it's easy to do the calculation where you put your buy stop limit or sell stop limit based on that. What is that noise? They're not allowed in our HOA. Okay. The larger time frames. That's what you were talking about. The QQQ. And if I were going to trade that on a range bar, when you have something really large like this, James, remember it's every tick is a penny. So 250 is $2.50 per bar, is what that is. And it usually does pretty well with the 250, but I like 100 where it's $1 a bar. But I know you're doing it to trade options, and the bigger the number, the more likely the trigger is to be a pivot bar. Right? Does that make sense? So, like right here, the bigger the number, when it comes out of the overbought, comes out of the oversold, the more likely it is to be a pivot bar. Right? When it comes out of the overbought right here, there's your pivot bar. Comes out of the overbought right here, there's your pivot bar. Comes out of the overbought right here, well, that was 1 bar off. But over here, came out of the overbought right here. That would have been a pivot bar if it kept going down. Same thing there. Right here, it was the pivot bar. You're not going to take these long trades when the background is blue. I don't know why those are even showing up. I thought I made it so it wouldn't do. Oh, I'm sorry. You would take them. I totally mixed that up. But the bigger the time frame, the more likely it is to be the pivot bar. All right. Again, the bigger stop you're going to have, but not the bigger stop with regard to the size of the bar. With this is a 100 range bar, so I'd probably have a 110 tick stop. So you're going to risk in here, you're going to risk $1.10. And what do you anticipate? Every time you take a trade, you anticipate it's going to exceed the prior swing high. So in this case right here, you're at 75.23 going up to 77.05. So you're $2.75 or $1.75. $1.75, and you're risking $1.10 to make $1.75 at least, is what you'd be thinking on that one. All right? That's the way that I think of it. And I don't I know that you're intraday trading options. Okay, you're day trading options, and that's fine. And this is going to give you a good indication of when to get in, when to get out. If you want to do them a little bit bigger, like a $2.50 bar, then you're going to have to, you'll know when it's not likely to work out, because it's not going to continue on with the trend. All right, if it pulls back and exceeds the bar that you're in with an option, that's not going to make that big of a difference with the option. And you can probably split the spread still when you do that. A 30 range in Q. Schwab. The question was, what size range bar does my friend use in the morning? Hey, I want to show you something else. This is something else. It's on one of these pages. This one, down here at the bottom. Look at that. Ding. You guys, a lot of you guys are asking, does this work? I mean, could you use this to do the prop trading? There's one of our guys got the 150K prop trading account. Okay, I thought I'd stick that in there. I know some of you guys have been asking me that. Wayne, you had asked that, or somebody asked that. It wasn't Wayne. Dwayne, I'm sorry, Wayne. It wasn't you that asked that. It was Gary, I think. Gary asked that. Yeah, that's in your thing right here. It was the last question. There you go, Gary. That's your last question. Answered. Yellow arrows, I did that. Okay, all those range bars, I did that. No, I didn't even get to what I wanted to do. Darn it. I didn't get to what I want to do, and the hour is over right now. But well, okay. Let me Am I recording this? Yes, Jeff. I record all of these. As a matter of fact, everybody that signed up for the webinar, whether it showed up or not, at the end of it, I put it in YouTube, so you'll be able to watch it in YouTube. But there's an automated email that goes out with a link to the recording afterward, so you'll be able to watch it again later if you want. Okay. All right. So, connecting the mind and the trade. All right. Let me just clear my mind for a second here, and not look at anything. And just clear my mind for a second, because I want to say this. It'll probably only take me 10 minutes or so to say all this that I want to say about this. Let me have a drink so I don't choke in the middle of it all. Okay, here we go. So those of you guys, I mean, a lot of you guys know. Some of you guys don't know me. You don't know me from Adam. You don't know anything that I've done, any of the things that I've done. But some of you guys have been following me for over a decade, and so you know all the stuff that I've done, that I've been doing over the years, and how things have evolved over the years, and how I always try to make things better. I'm always working to make things better and easier for everybody. But I'm like, when I trade, particularly in the morning when I trade, and I have everything that is going on in the morning, when I'm doing this stuff, and I have a whole room full of people that are asking me questions, people that texting me things, people emailing me things, people are they're in the chat boxes. I have like 2 chat boxes going at any given time, and I have multiple platforms that I'm working with, and and everything else. I have to really be like a machine with the trades. I have to have a set of rules, a concrete set of rules that I follow all the time, as though I was a robot, and as though I didn't really care what the outcome was. That's how I have to do it in the morning, and that's pretty much what I do in the morning, and that's like the connection of the mind and the trade. Now, last week I was talking about separating the mind and the trade, but what I mean is you got to get rid of the stuff that doesn't matter. Like focus on the things that do matter. When you take a trade, I mean, the way that it, as humans, we like things to make sense. And when we see things that happen again and again and again, like all the stuff that we do is based upon patterns, and and we expect the patterns to repeat themselves and to give us the results that make us happy all the time. And when it doesn't do that, well then, we get frustrated with it. We get disappointed with it. We might feel betrayed. We might want to change the pattern. We might want to stop believing that it's going to work. And that all goes to the confidence and sort of sticking with the plan. This stuff down here that I showed you, I alluded to a little while ago. When I started this part of it right here, I got to $7,200 an hour. That part I started in January of 2023. I followed the same rules, the same plan, all the way through for 20 months. Doing the same exact thing every day. And, this year so far, just doing those rules and working, this year I think we finished up, it wasn't 52 hours, like 43 hours or something like that. We had finished up the 20 months. But so far this year, even if I said I worked 53 hours all year this year, getting the goal for the day, when I quit doing it, adding 1 contract starting from last year, I was up $382,000 this year. And overall, doing the whole room in the morning, I was up 1.2 million. This is just following the rules and doing the same thing over and over and over again. All right, I know sometimes it sucks, and sometimes you're going to run into days like today, where John G, he started to question the trades that were getting triggered from the sniper because there wasn't any follow through on some of them. A few of them right in a row, there was no follow through. But we went back and looked. And when you go back and look, you can see that there's a whole bunch of them that did have follow through. If we go back to the NQ31 range, there's a whole bunch of them that did have follow through. If you're not getting the follow through, if it's not doing what you expect it to do, stop trading it for the moment. All right, you don't have to sit there and trade it continually hoping the same thing is going to happen again and again and again. No trade can be guaranteed. No trade can be guaranteed ever. And just because it's done the same thing, 5 times in a row doesn't mean it's going to do the same thing 6 times in a row. As a matter of fact, if it does the same thing 5 times in a row, I would be really skeptical. I wouldn't think it's going to do things 6 times in a row. The markets always go up and down, and up and down, and up and down. And eventually, they reach a point where it's just not worth that price anymore, right? And people are going to realize that, and they're going to sell. And once they start to sell, other people are going to say, okay, well, it's going down. Well, I'm going to take my profit. I'm going to take my profit. I'm going to take my profit. And because everybody's entered into a different place, you're thinking that they're all getting out and taking profit at some point. But you don't know. When the thing starts to go down, people could be entering at that point. People are seeing it go down, they're entering. They're saying, okay, I'm going to go short here, and I'm going to buy it back lower. You don't know why the market's doing what it's doing. All you can take control of is reacting to the things that you expect are most likely to happen now. All right? So that's what all these indicators tell you. All these little yellow arrows tell you, the next down close is likely to continue down. Right? If you get the little yellow arrow down, it says the next down close is likely to continue down. The little yellow arrow up, the next up close is likely to continue up. Now, the reason I tell you again and again and again, get your goal for the day and get out of there, is because you're going to have a good one like that, and you're going to have a good one like that. And that's great. But then you're going to have one like that. And that didn't work out. And then if you don't follow the rules and you say, okay, well, that didn't work out, I'm just going to take the next one. That one didn't work out either. Right? And that's going to happen. In this sampling of stuff right here, this is just a random sampling. In this sampling of stuff right here, you had 1, 2, 3, 4, 5, 6, 7. Well, all 7 of these worked out okay. But you get over to here. Now, let's say you have this. You have 8 trades now, and one of them stopped out. But let's say you start here and you stop out on that first one. All right? Do you quit then? Do you quit and you say, okay, I'm all done? Let's say you got this one and you skip that one and you skip that one and you got this one and that one stopped you out. And then you got that one and that one stopped you out. Do you quit then? Yeah, I'm making a YouTube video about the stuff that I want to talk about. I will someday. I'm actually going to get it all out here at some point. I'll get it all out in one video. But psychologically, you could end up being the guy that gets in here and you get that one, and then you skip the winner, and you skip that one, and then you say, okay, well, I got 2 winners in a row, I'm going to take this one. Bam, another stop out. And then if you're frustrated and you're saying, well, I can't get 3 in a row, and then you do that. For no reason at all, no real good reason, you do that too. That's just wrong. You're not following the rules if you do that one because you didn't put in a lower swing there. But we create problems with our minds. That's why I created this whole thing, so you don't have indicators on there. If you get in the market and it's not giving you any follow through, stop trading. Wait till you see a nice trend in the market and then go back to it. Okay? It's as simple as that. There are going to be days where there's not good trends, and there's going to be days where there are good trends. If you have big blue areas like this, you're in a decent trend. All right, eventually that's going to stop, but usually it's going to continue. And when it continues, you probably want to keep going in that direction. All right, and that's usually what the indicator is going to do for you. When you have the bias on, it's going to prevent you changing directions right here and changing your mindset. It's going to keep you just going long. All right. So there are times when you need to just, last week I said the lobotomy, where you separate your mind from the trade. You have to address each trade as though it's its only thing. When I look at it, like if I showed you how I keep track of stuff in my log every day, there's no dollar signs in there. There's no dollar value at all. None. There's just a total number of trades. The total number of trades that I take and the total number of ticks that I get at the end of it. But I don't have any dollar value in there. I don't keep track of the dollars and cents. I don't do that on purpose on my DOMs because I don't like to see that. I know it changes me as a trader. It changes the way that I think and the actions that I actually take. If I'm up really far, I might do something stupid. Like if I'm up really far, I might take this trade right here, which isn't a valid trade. This, well, kind of is because you went to blue and then back to red, but I might take this trade right here, which isn't a valid trade because this didn't put in a lower swing. But if I'm up really far, I might say, okay, well, I stopped out on that, and it just took back a little bit. So I'll take a shot on this one. I might do that. If I look at it and I say, okay, I know I'm up and I know it's not going to hurt me too much. I'm still going to be up no matter what. That's just the wrong way to think. If I were to quit trading when I get my goal for the day and I took this trade, I'd be done. I wouldn't even see these trades. And that's really where you want to be. You want to just get in there, be done, and come back the next day. And if the next day starts out rough and you don't get your goal for the day on a couple of trades, just walk away and come back. If you can do that, walk away and come back and try it again. The markets are going to have periods where they just don't trend very well. Like this whole period right here, it didn't trend very well. I almost got into a whole rabbit hole that I'm not going to do. I've run over 11 minutes now. Do I enter at the market? I do not enter at the market. Is it something available? It is, Gary, but it's an expensive thing. It's a whole other thing. I thought you had been in it before in the past. Actually, I thought Chad had too. And you may have been. I don't know. We've been doing that for almost 20 years. So, we've been doing this for a really long time. Do I enter at the market? No, I do not. When I showed you this right here, when I talked about this on the crude, and the reason I was using a 9 range was so that, if the bar was going to close down, if you're looking for a bar to close down, the top of the bar is right here at 35, you could put a sell stop limit right there. That's how I do it. That's how I enter trades all the time with limit orders. Right? I put a sell stop limit order there because I know that the bar is going to close right here because it's a 9 range bar. So if this is the top, this is where the bottom's going to be. And if it closes at the bottom and it triggers a trade, it's going to fill me right there, pretty close to there. And then I'd be in the trade, but it's a limit order. Okay? And okay, this is all new to you. Alright, yeah, the other thing's expensive. I mean, it's worth it, but it's expensive. But in that we teach you how to trade. In this, I just give you the indications, give you the indicators, and it tells you when to trade. And that teaches you how to trade. Right, and I'm actually giving you little bits and pieces as we go along here anyway, with the whole training part of it. But that was kind of what I wanted to do. I kind of ended up mixing last week's and this week's. When it comes to connecting the mind in the trade, you only want to connect as much as you want to, as much as you need to. You don't want to connect. You don't want to overdo it. You just want to say, okay, does this meet the requirement for a trade? If it does, take the trade. If it doesn't, don't take the trade. Don't think any more or less. Follow the rules all the time. Have a set of rules. Every time you get into a trade, you should know how big your stop is going to be before you get into that trade. Know how big your stop is going to be. Don't move that stop away. The only time you should move that stop is to reduce it. Never increase your stop. Those are horrible, horrible habits that people get into. You got to have... There are 3 parts to every trade, right? There's the entry, the exit, and the risk management. The money is made in the risk management. Anybody can enter a trade. Any idiot that has an account. Okay, any person. Sorry, I don't want to say idiot. Any person that has an account can come into their account and put a trade on. Just randomly throw a trade on. Like I could go short right here if I wanted to. I can go long right here if I wanted to. I don't have any reason to, but I could. And you know what? It might work out. Whatever I did, it might work out. It might, if I went long, it might go up to here to the prior swing high. This prior swing high over here. It might actually go up there and make some money. And it's $10 a tick for the crude, so it might make, if I had 10 contracts on, I could make, an easy $100 there in a minute or two. But, but you don't want to do that. You want to have a reason to enter the trade. You want to enter high probability trades. Like this right here is a high probability opportunity. And this right here did not put in a higher swing, so you would not be looking for anything else after it. But this right here did give you a higher probability entry opportunity, and it went from right here at 635 up to here at 645. So it went 40 ticks. 40 ticks times $5 a tick with one contract on. Right? $200 right there. And that was in the time that I've been talking, pretty much. The risk management is where the money is, right? You want to get your risk off the trade in a sort of mechanical fashion is the way that I do it. Like, I know exactly how far it's got to go for me to bump my stop to break even. Right? After that, when price gets up near the prior swing high, I start to trail my stop really close to price. There was a trade that I took today. I'm trying to think. I can't put anything out here to it. But there was a trade that I took today, and it was on the YM, and it was at the end of the session. And let me just go to the YM. I'll show you the actual trade. Okay, it was on a YM 19 range chart. I'll show you the actual trade that I took. It was here, and it was on a 19 range, and it was right around 130 today when I finished the stream on YouTube. Here it is. It was this trade right here. No, it wasn't that one. It was somewhere else. 130. 1332. It was right here. This one right here. I took this trade, and it came out of the oversold, and I had, if I put those other things on there that I showed you a few minutes ago when I had the 777. Okay. So what I was looking at was this right here. Came out of the oversold. It actually bounced off of that. And I was looking for it to get up to here. Right there is what I was anticipating. Now, I had a 45 tick target on that, and 45 ticks would have put it right up to here. But as it came out of here, and it started to get into profit, it had 10 ticks in profit. That's the way I do it with the 19 range. After 10 ticks in profit, I bumped the stop to break even. So after it had gone 10 ticks into profit, I bumped the stop to break even. And then it had gone up pretty close to 20 ticks in profit, and I bumped the stop up to plus 10. And I was thinking I was going to wait until it closed this bar out and then bump it up, because that would have been 20 ticks in profit when it closed that bar out, and then bump it up. But the way the day had been, I was running out of time, and I let other things influence my trade. Because I was running out of time, like I finished that session at 13:30, and I only had a couple of minutes left in that session. And I was running out of time, and we're getting to the point where the FOMC was due to come out soon, so I didn't know how much market was going to follow through, but I was totally anticipating it getting up to at least that level right there. But I bumped my stop to plus 10 ticks. Now, normally I would wait for that thing to close, and then as it approached this level right here, I would bump my stop up pretty close and trail my stop close. That's how I manage my risk. Okay? I let it run pretty loose. I lock in a good amount, but then I let it run pretty loose until it gets up to the prior swing high. When it gets up to the prior swing high, that's usually when it's going to bounce back down and hit a little bit of resistance and bounce back down a little bit. So rather than give away that profit, I bump my stop up pretty close, because I'm happy taking from here to here. It was almost 45 ticks. It was like 42 ticks from there to there. And I was happy taking that if I could have gotten that. And that's 4 times my goal for the day. Actually, 2 times my goal for the day. And I'd already got my goal for the day several times over. So, managing the risk, the stuff that happens between the entry and the exit, is where the money is. Okay? And the indicators, all this stuff that we have gets you in the trade at a really good place. Understanding where it should go after that is where the money is. Now, if you're trading options, like James, if you're trading options, then you just want it to go up, right? You're just expecting it to go up. You buy it, you buy the option, you're expecting it to go up, and then you want to bail out of your options probably before the end of the option day, the end of the trading day. So you're not holding it overnight, so you don't, anything that happens overnight, because you can't trade options overnight like you can with futures. Excuse me, I'm losing my voice right now. You can't trade options overnight like you can with futures, but you probably want to bail out of it at some point. But as price gets up to the prior swing high, even with options, with an equity, as price gets up to the prior swing high, that's usually where it's going to find some resistance. If it breaks through that, then then you can start bumping up whatever your sell price is going to be on that option, so you can make some more money as it keeps moving up. That's the way that I manage a risk. That's the way that I deal with futures every day. Okay. Now, I ran this thing over 20 extra minutes today. I'm sorry about that, everybody. But I really did want to cover a lot of this stuff. And I didn't have a chance to. So, alright. It is a stop limit order. Gary, it's a stop limit order. Alright. When I put one of these on, like this, for me it's a right click right here. That is a buy stop limit order. That means price has to come up here and pretty much get through this to fill me right there. So it's not a market order. It's a buy stop limit order. Price has to go up there and get to that, pretty much through that to fill me. Alright, a limit order is down here. The price has to pull back down here. It's got to pull back to this level to fill me. Alright, but up here it's got to run up to that level to fill me. So the way that I do things, like on this bar right here, this is the YM. Let me get a YM DOM. Okay, the way that I do things, like right now with the YM, what time is it? 4:21. The low of this bar is right here. This is a 19 range, right? So the way I do it, the reason I do it with the 19 range is because it's 20 ticks away from the top of the bottom of the bar. So the bottom of this bar is right here at 67. So I would be buying right now 97, like that. Alright. If we got an up close on this bar right now, it would close up here at 96. It would fill me at 97 or somewhere around 97. It would fill me, and then I'd be long. Alright. It would satisfy the rules for the trade requirement on the up close. Okay? That's how I do it. That's why I do it that way. That's how I do it that way. And that's why I recommend you doing it that way. And that's why I use these kind of weird numbers for the ranges. Alright? You know, I do it so that the math is easier for you to do in your head. You know, I don't, you guys may know, you may not know, but one of my degrees is in math. And I know not everybody can do the things as quickly in their head as I can. And so I try to make it easy, and the ways to make it easy is to make it nice round numbers for people, make the calculations easy. It's a lot easier for you to add 19 ticks than 20, add 20 ticks than 21 ticks, right? Isn't it? You know, you go from 68, you can say 20 ticks is 88. You know, 21 ticks is 89, but with the YM, that's an easy thing because the YM is one based, really. But if you're doing something else, like one of the other markets, like let's do the NQ again. If you go back to the NQ, it's 4 ticks. 4 ticks. That's why with this, I use things that are multiples of 4 minus 1. Multiples of 4 minus 1, like a 31 range. 32 times 4. I mean, sorry, not 32 times 4, but 8 times 4 is 32. So 32 minus 1 is a 31. And the reason I do that is because if I'm looking at the bottom of this bar and I want to buy on an up close, the up close, one tick above the up close is going to be 8 points from the bottom. So I can add 8 to 52.75 a lot easier than I can add, 8 1/4 to 52.75, right? I try to make the math easier for you, easier for everybody. It makes it easier for me too. And then, when I'm doing this stuff in the room in the morning, I'm talking about this and I'm telling everybody as this is happening, in real time. Okay, well, if we get an up close on this, where it's going to be up here at 8 1/4, or 659 is going to be 659 1/4. And then as it moves around, I have to redo it mentally and verbally. For those of you guys that have NinjaTrader, we do have something that helps you with all that stuff. You can do it all ahead of time with NinjaTrader. If you're trading on NinjaTrader, you've got to get in touch with me about that. But, can I write out the target, stops, and break even on the website? I'll go to a website that has it all written out for you. Here. If you go to mytradingiq.com and go here to trade rules, this is it right here. Okay. Copy. Gary, that's the other thing. Okay, so if here, this is it right here. Risk management suggested for all platforms. I'll put that in the email that gets sent out at the end. I'll add all that in the bottom of the email that gets sent out at the end when this thing is over. Okay, there's an automated email that goes out. I'll add that to the email. Okay. You don't really need a math degree for that, no. No, you don't, Daniel. That's I made it. I made it easier so that everybody can do it. But I know that my mind, I have a math brain and I can think of things. I can calculate things a lot faster than a lot of people. But what did I just mention about Ninja? I can't show you on this computer because I don't have NinjaTrader working properly on this computer. But what I talked about is I have this thing for NinjaTrader that will keep track of where the order should be based upon where the bottom of the bar is and the top of the bar is for range bars. It'll do all that for you and it'll reposition the order for you. It's a pretty cool thing. But it is just for placing orders on range bars on NinjaTrader. That's all. I don't have it for any other type of time frame or anything like that. And I really don't want to get into it. But it is something that's pretty cool. All the stuff that I was telling you about, when I do this and I have to do the calculation in my head, you don't have to do that calculation in your head. It does it for you. I wish I could make something like that for the platform that I actually trade on. I trade on StoneX. That's what this is, StoneX. And I can't make it for that platform. I wish I could make it for the, I might be able to get it made. I might be able to get it made for this platform. I might be able to. I should look into that and see if I can get it made for this platform. The thing I don't like about this platform is it's another layer on top of what your regular platform is. If you use the DOM in here, you got to connect to the, you got to connect over here to the whatever it is. What's it called? Trading panel, the paper trading account over here. All right, or your real account if you want. You can connect to your real account too. But you gotta. Do I have a live trade open? I apparently had some trade in there. Anyway, to do this, you do Shift D, and then you have your DOM over here. And this, if I were to connect this to my StoneX account, which I can do, if I connect it to here and I place a trade here, it literally goes from here to here, and then to the exchange. Like I place it here, you'll see it come onto this DOM here, and then it goes to the exchange because it got placed on this DOM. So it's a whole other layer of stuff that you don't need to use. But I don't know. Might be able to do something with that. You do trade on Ninja. Yeah. Sign up, Gary. Alright. That is going to be it, guys. I've run this meeting over a half an hour. I'm sorry about that. I'm sorry about that for everybody that stuck around for me. Thank you for all sticking around. Hopefully it was worth it to you, but I'm going to shut this thing off. Alright. I didn't mean to run it over a whole half an hour. That is unlike me. But I did get started right on time. If any of you guys have any questions, you can email me at support@targetviewtrades.com. You can text me at my phone. My phone is 617-943-3298. Don't call me at that number, but text me at that number, okay? 617-943-3298. And if you have a great trade, text me the trade that you got. If something happened that's good, text me the trade that you got. And even if something happened that's bad, maybe I can help you. Maybe I can't. Depends on what I'm doing during the day. But right now, I got to get in the car and drive to Raleigh, which is a 3-hour drive, and then I got to drive back, which is another 3-hour drive. So I will try to get all this stuff done for you guys, and I'm going to stop the recording right now. I want to thank you all for coming. Again, if you haven't taken the trial with us, let me go here. It was which one? This one. Yeah, it's got the round one. Go here to tvtrades.com. Right, tvtrades.com. Just click up there. It'll bring you down here. $25 a week if you want to do the weekly. $90 a month if you want to do the monthly. $9.97 a year if you want to do the annual. I recommend you do them all. No, you can start out with the weekly. You can always upgrade to the other ones if you want to. Upgrade to the cheaper ones. But yeah, do all that. Alright. And let me stop the recording right now.